Hey everybody, hey traders, Chris Moore here. Welcome back to another segment with the 8-cap earnings masterclass. We just had some big news this week. We have 200 plus companies reporting earnings, and two big ones are Netflix and Tesla. Send a video out highlighting all this information. So here we are. Netflix comes out. We're back on top with a big price reaction. However, Netflix actually missed on earnings per share. So the expected move was 2.21 earnings per share, came in 2.11 with a miss of 4.81%. But revenue and some optimism moving forward with kind of reclaiming the streaming top spot. Revenue beat by 1.26%. And the price reaction was pretty solid because we had a break from around 490 all the way up to $550. So I'll show the chart here in just a moment. Let's go into Tesla, which is coming up after market today on the 24th. It's Wednesday, the 24th. We've had a drawdown in Tesla about 20.5% since the high of the year. So around December 28th when the market peaked, December 29th when the market peaked. Tesla's been in a steady downtrend since. Used Tesla prices are down. New Tesla prices are down. There's just been a lot of concerns moving forward with their ability to stay in revenue, lower demands. And anyway, we'll see. We're sitting here around $210 on Tesla. The EPS estimate's 73 cents, and the revenue estimate's 25.64 billion. So let me go to the charts here and take a look at each one. Let's go to Netflix first. Netflix, here's the trade. So I wanted to explain what I did on Netflix because I just made some money this morning and I did it a couple different ways. So I have two trades running on Netflix. One was just simply looking for a breakout one way or the other. And you can see that the breakout exceeded my expectations to the upside. So in my trading room, this is what I ended up doing here on Netflix. Here was it's essentially two debit spreads, which I'm just trading options for this. I went ahead and I bought the 515 long call and I bought the 460 long put. So I was kind of bracketing, trying to make a little bit inexpensive, and I also sold some legs on top of that. So I paid 1095, which for me for one contract that's around $1,100, but closed it out today for 1905 for a nice win. I do want to show what that's trading for right now. Let me go into my broker platform here. Let's see if I go into trade, build the trade back out. Iron Condor spread is currently trading for about $19.60. So I'm giving myself, maybe a 50 to 66 cent sacrifice, but I closed the trade out within probably 30 minutes this morning of opening bell. On the high side, I mean, Netflix was up to around 562. So maybe at one point, my 1095 that I paid was probably trading for like 22 to $23. If you're familiar with that in the option space, that's over 100% gain on the position, which I'm always happy to take. What I ended up making on the position was around 80 plus percent. So $8.10 divided by the 1095 that I paid for it. I made 74% of that position today, which I'm pretty happy with. I still have a trade running on Netflix, and it's out until the 2nd of February, which is next Friday. And all I need Netflix to do is this. If we come back in and fill this gap at all, I will have some profit running. My max profit in this trade for one contract is around $2,900, and my max risk is about $1,400. So it's still a 2 to 1 for me if I'm right. I may not claim the entire chunk of profit, but if we come back in and all I need price to do is get back below this level right here, which is around 530. If we get back below 530, that trade starts to work in my favor with the time on my side. So one trade was a buy trade, and this is just easy stuff. If you buy the stock, tight stop loss, sell the stock, type stop loss to the sell side. There's obviously a gap, and sometimes it depends if you're trading CFDs or futures. But if you're trading this stock, the gap higher kind of stings on one side. But at the same time, if you bought it, that's what we're looking for is just to be, long the stock or short the stock and see price move. That's why I take both sides of it. I know that I'm going to lose on one of them, but if the market does what it should do on average or beyond what it should do on average, there's a lot of money to be made on some of these option trades. So Netflix has been good. Like I said, the next couple weeks, I have about 10 more days in the trade. So all of next week through FOMC and through the 2nd. So I have 7, 8, 9 trading days left. If this starts to get faded at all back down below 530, I'm going to start taking some profit out of my option trade as well, where I'm actually selling and collecting that premium. That's on Netflix. Let's go to Tesla. Tesla stock is sitting around 210. Like I said, there's been a drawdown since the high of the year. That was end of last year around December. This is a daily time frame, so it shows the high around December 28th. We've been in a steady downtrend with as much as 22% to the downside. We're currently sitting around that 20.7% drawdown. Now, coming into this week's earnings, Technically speaking, I mean, if we have a big miss in earnings, I could see Tesla continuing to get punished and taking out this low, which I certainly wouldn't mind because I'm trading both sides of it. So what I'm doing on Tesla is this. Here's my spreadsheet. Here's my trade. I bought the 215 put. So again, options trades. I'm short at the 215, looking for a short direction rather. So I bought the 215 put and then I sold the 185. So I give myself $30 of potential profit. I'm paying $15.30 for the position. So if we see a big move to the downside, right now I'm already positive in the trade, but I'm going to still give it a chance to let the earnings report come out this afternoon. And if we have a big miss to the downside and this thing gaps lower and even pushes lower, then I'm looking at probably closing out for $20 to $25 credit. If I make $5 to $10 on that position, let's just do the math. Let's say that I close it out for over $5 a credit. If I take $5 a credit, I paid 15.30. I can close out for a 32% profit. Would be really nice would be this thing blows through my highs or blows through my lows, and I can close out for the $30 credit or close to it, and that would give me a net 15. If I take $15 a credit, divided by the 15.30 that I paid, make 98% of the position. I'll be stoked with that. So that's what I'm trading on Tesla. I really don't care what direction we go. I just want to see a big reaction in volatility. So for me, this low, let me check the price on this one. This low is sitting at 194. The average move on Tesla, let me go into trade up here. And I talked about this in my earlier video. So the average move on Tesla is somewhere right around 9 or 10%. Let me confirm that. So we have a move around 11% on average. I think I calculated it based on a 10 to 10.5% move. So we're trading at 210. For the week so far, we've already made a decent move. With its indecision, but we've at least had some movement to the high side and low side. So we're sitting at a high around 217 with a low around 206. We've already made about a 10 to $11 move. The average weekly trading range is 21. And if we do the 10.5% move, 0.105, there we go. So 10.5% times the 210.69. So I'm looking at about a $22 move with earnings. So if we're sitting at 210 and we go $21 or we go, 20 plus dollars in earnings, then this potentially gets down to the, 190 level or lower. And to the upside, we go to 230 or higher. So if that is the case, I will see at least the trade covered. I mean, if I'm looking at 190, I have the 215. So if I go down to 190, that's going to give me $25 of real value on my put side. If we go up to 230, that's going to give me 15 values or $15 of real value on the upside. That covers the cost of my trade. This gets me in a nice profit. So with the continuation lower, that's going to be the easier route for me to make some money right now in Tesla. But like I said, I'm trading neutral. So if we have a big surprise, the upside or downside, hopefully one way or the other, it goes beyond what the market expects. And I'd like to see a trade where, maybe Tesla gives us like a $30 to $40 surprise move and lets me, capitalize on some nice expansions there with that volatility and earnings. So back to the summary for today. Keep this short and sweet. Netflix back on top, kind of reasserting itself as a streaming war king or queen. But missed on EPS, but hit on revenue, and the summary, the bullet points sounded pretty optimistic moving forward. Clients are happy, subscribers are growing, all that's good stuff, and the market responded really nicely with a big rally. Like I said, if that is too big of a rally and it's caught off guard, there might be some rebalancing. If we see the market fade Netflix a little bit, and we come into FOMC and the market starts to fill some gaps on the indexes, this is another thing we need to be aware of. Okay, the SPY sitting here with a big move from last week, Wednesday, Thursday, Friday, big moves. We have 3 weeks in a row kicking off this week or this year rather. But going into, February, post FOMC, I'm certainly interested to see just on the daily time frame if we have some gaps getting filled. Right? We had this ridiculous holiday rally, one of the biggest we've seen in a long time, just one-sided, and we're still stretching and still stretching. There's gaps, there's gaps, there's gaps, there's gaps. If we have a little bit of a pullback, I could see a big snap on a stock like Netflix or a big snap in somewhere, Apple, the Mag 7, stocks like that. So it will be interesting to see if the market just keeps plugging away. If we get into FOMC and the S&P is up to 500 or the XPS is up to 5,000, that'd be a pretty remarkable move just to get us right out of the gates this year. But I wouldn't be surprised if by February, March, we have a little bit of a pause or this rally gets checked in some capacity. That being said, though, I do want to show you what I'm looking at for my stocks. I'm looking at trading it kind of both directions. So I'm long the SPY and short the SPY. I'm long the Qs and short the Qs. I'm looking for price to go somewhere. And here's my broker platform. One of my broker platforms to take a look at the positions. And to the upside, let's get this out of the way here. To the upside, if I go into the SPY, right now I'm around break even, like minus $15 on the trade. The Qs, I'm up about $8 on Tesla. I was positive on it today before earnings. I'm up about $50 on Tesla, and Netflix. I still have my trade running. I'm going to let that go a little bit further. My max loss in this trade is 1,400. But if I start to get price back below 530, like I said, I'm going to start seeing some profit where I could possibly close this for $500 to $1,000 profit. Max profit is we come back to 485 or anywhere close to 485. I'll be closing this thing out for like $2,900 profit. But watching for the next 24 to 48 hours, it's all about Tesla. If we have a big move up or down, there's my 215 by 215. I'm looking at a blowout move. If we get below 185, that's ideal for me. Is to see this downtrend continue with another push to the downside lower, and then to the upside. If we have a big surprise, if we have a big blowout move where EPS is well beyond expectations and possibly revenue beyond expectations, but it's going to be tricky because one thing that Tesla has been doing has been slashing prices, and the revenue estimates have just been lower and lower and lower. So we will see. If it's a miss on both sides, part of me thinks that the market is just going to absolutely crush Tesla and possibly spike it down into these major levels. Structure wise, what I have on the chart is right here. We take out that low, possibly looking at some, more structure in here around the 180 level, 180, 175 level. That would be great for a trade to the downside if we have a big push lower, right? Plus we have FOMC next week, so all this stuff is coming to a head. So I hope this helps. This is some exciting stuff. This is what we wanted to see is earnings season kicking off and heating up. 242 companies, and Netflix was a big one today. And as we take a look at price and the reaction, we're starting to see price getting faded from the highs around 560 today, and that's not a bad thing. So, take some profit on the upside, which I did. If we fade back in and start to fill this gap over the next 10 days, that's good too. So hopefully I can make money on both sides, and that's why we trade. If you have any questions, let me know. Happy trading lots of profits, and see you later. Thanks. Bye.